Okay, let's get a quick comment from our technical experts this morning. Sudarshan Sukhani and Mitessh Thakkar join in. Sudarshan, good morning. Your thoughts on the index, which is now at the lower end of the trading range. How are you positioned today?
Yeah, good morning. Well, that lower end has held down to as support for so many days, so it's difficult to identify that as a critical point. You know, the markets are in a trading range, and that's an easier view to take. Now, this trading range is getting narrower on the upper side, which means essentially we had 18,300 as resistance, 18,250, then 18,130. And I would say that the resistance levels are now slowly coming down to yesterday's high of 18,050. And what we have now is a small trading range with 17,800 as support and 18,050 as resistance. Normally, Sonia, I don't use these numbers. They get very confusing. But with a narrow trading range, these are the only two numbers that we can work on. Inside this range, this 250 range, the markets are not tradable. If you can get something in the intraday trade, good for you. But the big trade will come either we break 17,800 or we break 18,050, and for that we need to have a lot of patience. That will happen. I just don't know when, and I don't know the direction. So just stay put for one of these levels to break.
Okay, all right. Thanks for that, Sudarshan. Mitessh, what about you?
Morning, Najib. I think very clearly the range is now getting more and more defined. 17,800 in the last 2.5 weeks has held down about 5 times on an intraday basis, which means that we have had a dip below that, but not a breakdown. And on the upside, 18,150, 200 doesn't seem to be getting crossed. So I think we are still in contracting kind of a mode. Therefore, a fresh trade on the index we'll do once we break 17,800 or we are closer to that. Then maybe if we see a reversal on the half-hour chart or something like that, you might want to attempt a long and try to get short closer to the upper end of the range until there's sign of a breakout. So I think you're basically employing some kind of contracting strategies in this market. You can even trade via option spreads. But otherwise, trading is more stock specific. And I think somebody was mentioning IT in the morning. I think clearly that's the sector which has gained some momentum and could be a good bet on the long side.
All right. And quickly on to individual stocks. Mitessh, what's your list looking like? Would you go for IT?
Yes, I have 2 buys and 2 sells. And one of the buy recommendations is from IT space. In fact, Tech Mahindra was a stock which was buzzing yesterday. There was a TV interview as well. And the price action was very good. Volume was very supportive. So that's a buy. Keep a stop below 1,020 and 1,070, 75 should be the near-term target range. Similarly, IDFC Limited is a buy. Here, I would recommend a stop below levels of 86 and a first price target of around 92. On the sell side is Axis Bank. And I think, banks have slightly started to show signs of profit booking. So Axis Bank is a sell with a stop at 924.5. A target of 890 can be looked at. And Crompton is a sell as well with a stop at about 336 for targets of 315.
Okay, all right. Thanks for that, Mitessh. Sudarshan, what about you?
Well, I have more buys, mainly because there are some opportunities even apart from the index. Colgate is a buying opportunity. Colgate has gone through a mini bear market, or like some of the other FMCG stocks. There is a sense that this sector is now bottoming out. This is a process. It's not an event. It doesn't happen in a day or half a day, but it's worth buying into. In fact, all 3 stocks, Colgate, Dabur, and Hind Unilever, traders could look at all 3 stocks to buy for a positional trade, not an intraday trade. For Colgate, keep a stop of 1740 and then see where 1470, and see where we go. REC is another buying idea. REC has so many things going on for it. It's an outperformer. It actually goes up when the Nifty goes down. That's so nice. Buy with stop under 118. TVS Motors is my only intraday short. It's surprising, I have Bajaj Auto as my buy multiple times earlier, and TVS Motor does the exact opposite and keeps on falling. Some differences perhaps between the 2 stocks. So that's an intraday short, the stop above 1,010. And finally, Hind Copper is a buying opportunity. Same story. It's rallying. It's outperforming the market. So look to buy it with a stop under 120.
Okay, just 2 more names, Mitessh. If I can ask you these, there is a D-Mart which sold off. Now volumes are a bit of an issue here, right? Doesn't trade that much. But yesterday I looked, volumes were the highest since July of last year. The stock was down sharply, and the other one is PVR, which was down 4%. Is there more follow through? Both these names.
Perhaps PVR, I have not looked at the long-term charts, but D-Mart, I think, with the gap down and numbers being announced yesterday, it was there on my radar. I think this gap down suggests a significant kind of a declining movement could happen in the near future. I think all the indicators will turn negative. The averages have looked negative, and there's a gap down, as well as this has damaged the weekly and the monthly charts. So I would look at a retest of levels, which would be closer to about 3,400 to begin with. That was the monthly low which we got in June of 22, and possibly even a break below that. So I think there could be more downsides there.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's get in. Chandan Taparia,